How you buy matters more than what you buy. If you're still underwriting deals the same way you did 5 or even 10 years ago, you're not investing, you're gambling. Today, I want to talk about how you should be buying real estate right now and who should be buying it all. So, if you're active in this market and you're not acquiring properties either out of bankruptcy or foreclosure or at a basis well below replacement costs, you're playing a really dangerous game. Anything outside of that criteria just does not make sense in this environment. Buying distressed or deeply discounted assets isn't about chasing bargains. It's about resetting your basis and positioning the asset to survive a structural reset. You're engineering flexibility for an uncertain future. When you buy it right and you lock in that lower tax basis, you're reducing your operating expenses. This gives you the margin and the flexibility needed to operate efficiently and execute your business plan. That flexibility is everything. It helps you hold longer, lease more competitively, and protect your cash flow. So when operating expenses are rising faster than rents and tenants are more discerning than ever, the owners with the lowest basis have the advantage. Now, everyone likes to say that they're buying below replacement cost, but let's be honest, today's replacement cost numbers are just as distorted as the values themselves. Every single input, the materials, labor, design, permitting, they're all inflated beyond reason because let's not forget the system we operate in is designed to make everything more expensive, not necessarily better. So here's how you need to think about it. Replacement costs should be your ceiling, not your target. If replacement cost is $400 a square foot, your buy range should be 30 to 50% below that. So in this case, $200 to $280 a square foot. The reason for that is that margin accounts for the monetary premium. That is what Bitcoin is absorbing. And the buyers that ignore this are the same ones that are going to be begging for interest rate cuts. They're trying to pass every single increase onto their tenants, and they're ultimately the ones that hand keys back. And here's the harsh truth. If you don't know how to buy out of distress or negotiate a basis well below replacement costs, you have no business playing this game. Bitcoin is the better opportunity for you. You have no leverage, no liability, no tenants, no drama. It's a set it and forget it option. Real estate is getting exponentially more difficult. So if you don't understand deal structure, value, and capital efficiencies, you're better off sitting this one out. Every successful acquisition moving forward is going to share three key traits: quality asset, quality location, and quality basis. This is step one in being competitive and profitable in real estate. In a system that's recalibrating on every single level, margin is everything. And the pros already know this. There's a reason why we say you make your money on the buy. As always, I want to hear your thoughts. Drop them in the comments below or DM me. I'm also going to ask you to share this. Share it with your clients, share it with your team, share it with your investment partners. I need your help spreading the word. Thanks for stopping by, and I'll see you here next time.